This is episode 1110.
We're looking at many of our major metrics that would give us leading indicators of what's happening out there in the market today on not just a weekly or monthly basis, but actually daily trackers so that we can see if things are changing as the news cycle changes and the environment changes. And for those, we look at not only the metrics of our business, so, what's happening with sales cycle lengths, what's happening with new lands, but we look at things from our customers' perspective. How's their GMV growing? How's their, what we call KAV, Klaviyo Attributed Value, the revenue that they generate directly from Klaviyo? How's that growing? What's happening to average order value, to average order size, so we can really try and put ourselves in their shoes.
Hello, Amanda Whalen is with us, CFO of Klaviyo. Amanda brings deep operational and strategic expertise from a diverse range of companies, including Walmart, Bain & Company, C&S Wholesale Grocers, Dean Foods. It's really an impressive mix. Amanda, welcome.
Thank you so much. Very happy to be here, Jack.
Yeah, so Amanda, I haven't seen quite a variety of companies and different industries as well. And we'll touch on that. And we're excited to ask you this question. Look back for us. Tell us about how you eventually find your way to the CFO office. Originally, we'd like to look back at those early experiences where you sort of sharpen your lens on finance. But go back in time for us. What comes to mind?
Sure. So I'll walk a little bit backwards through my journey and then what I think have been some of the core experiences that got me there. So I've been CFO of Klaviyo for 3 years now. Since I joined 3 years ago, our revenue has more than doubled while our operating margins have gone up 20 percentage points. And we went public in September a couple of years ago as one of the first high growth software IPOs in nearly 2 years. I was previously with Walmart, where I was the CFO of Walmart International, nearly 6,000 stores, 25 countries, over $90 billion in revenue. And before that, I led treasury and tax for Walmart during COVID and was the head of FP&A, where I led the implementation of zero-based budgeting. And then before Walmart, I spent about a decade, as you mentioned, in finance and strategy execution roles across a big variety of different industries and started my career with a decade in consulting at Bain & Company. And I think more than anything, what has prepared me for this role is that breadth. I like to think about a career as almost like a bingo card. So if you think along one axis, particularly as a finance professional, they're all the technical aspects of finance. Do you have experience in FP&A and accounting and treasury and investor relations? And along the other dimension, it's all of the different business situations that you've been in. Have you been in a high growth company? Have you been through a turnaround of either a company or a team? Have you been through a major transaction, a major M&A integration? And I think the best careers are built by filling in as many rows and columns on that bingo card as you can, because what that teaches you to do is it teaches you to learn how to learn. You have to get in really quickly in each new role and be able to assess what's going on here. Where is the function today? Where does it need to be in the future? Build a strategy and then get moving on starting to execute to make things happen. And the reason I think that breadth is so important is because as leaders today, the world is changing so incredibly fast that there is no way that you're ever going to have seen every single thing that you're going to come across in your career. So the best thing you can do is prepare by having a breadth of experiences so that you can pattern match and then also learn how to learn. So once you, go into that new situation, you know how to quickly adapt and move forward.
I have to mention, you did mention that upfront, that decade at Bain & Company. Again, one of the top strategy houses, Bain, BCG, McKinsey & Company. You spent 10 years there. You must have liked being a management consultant. Tell us something about that.
What I loved about Bain & Company was that it gave you that breadth and depth of learning across different functions, across different industries, what really makes a business tick. And it also, I think part of what made me love finance and become a CFO, teaches to be very quantitative and very analytical. The other thing that I really picked up from Bain that has been very helpful across my career, but particularly in tech, is the importance of first principles thinking. Breaking a problem down into pieces, thinking, okay, what is not only the high level problem, but the root causes and the root causes below that, and then systematically working your way through. It's just a great framework and training for any aspiring business leader. And it's interesting. I think you gave me the background. You asked, how did I end up in finance? And what was that pivotal moment? I was head of strategy. What now these days would probably be called business operations. We called it strategy and execution at the time. And had always planned to go be a general manager running a portion of the business. But one day, the president of the business I was in came to me and said, Amanda, we just got acquired. The bar for finance at this new company who just acquired us is even higher. And even without the acquisition, I don't have a great understanding of my costs. I don't have sales teams selling the right things. I really need to take finance to the next level. You're not a finance technical person, but I believe you can pick it up, but you're the strongest leader on my team. Will you be willing to be the CFO and help me transform the finance function? And that was how I became a CFO. That was about a decade ago.
I just want to point out, when you do leave Bain, it's really not you step into a strategy and execution role. Is that right? It's not like you're stepping into a traditional finance role yet.
Correct.
But it's while you're in that role that you demonstrate something that sharpens your focus on finance.
That's right. It's these strategy and execution roles, and here at Klaviyo, business operations reports up to me as well, which is the equivalent of that function. They teach you a breadth of perspective across the business. It really sharpens your analytical skills and lets you think about where and how do I drive value in the business, and importantly, how do I make things happen? How do I take it from idea into actual execution? And the bridge from there into finance is strategy is a highly analytical role and thinking broad and long-term about where the business is headed. So is finance. That's the role that great finance leaders play, is they are, on the one hand, thinking, very high level strategic. Where do we want to go? I think of it kind of like a dolphin. Like a great finance leader is up above the surface, looking at the horizon, thinking about the long term, and then diving very deep, getting into the weeds and the details. How does this process actually work? What are the analytics? What is this data? And you have to be able to go back and forth between the two. And that's what that strategy and execution gave me experience in.
I just want to highlight the different companies that you were part of. You landed, you're at Klaviyo, you're in tech today. That wasn't the case. You don't have a traditional tech resume, and experiences you touched on. Again, coming out of Bain, I would imagine you had a breadth of clients that you served. Some might have been tech, but when you do step into industry, if I have this right, Dean Foods was a dairy company. You were there 5 years with Dean Foods. You had a decade with Bain and Company. So we see the investment being made. But it's from there that you actually step into a CFO role at your next company, a unit CFO role, really. You've demonstrated in some way that you're a leader and that finance is your lane. So I'm just looking for those clues as to how you were able to achieve that.
Yeah. The common theme, and I recognize you can look at my career and say, okay, consulting, dairy, distribution, retail, technology. What is the common theme and the common thread here? It's that I love being a part of massive transformations. I get really excited and energized working for fantastic leaders who are out to change the world. And that's what it was at Dean Foods. And then what became Morningstar / Saputo. So that was actually a merger and integration that happened there in that role. Same thing at CNS with Rick Cohen and Mark Verdi, who had hired me. And then at Walmart, it was being at the epicenter of what they've now written a book about the battle between Walmart and Amazon. There's a book called Winner Sells All. And the common theme is, at Dean, Craig was out to transform the dairy industry. In CNS, Rick was transforming warehousing and distribution through some really advanced automation that later became the company Symbotic. And Walmart's transforming the way that people shop around the world. And it's so exciting as a leader to be a part of changing an industry, changing a company, changing an industry, making an impact. And that's absolutely what Klaviyo is as well. Andrew is an incredibly compelling leader, just has a brilliant vision for where technology can go, where this company is headed. He's exciting, he's inspiring. And when we first met each other, I said, that is a company I want to be a part of. This is going to be one of the great, at Walmart, I got to be a chance to be a part of an iconic company, and help play a small role in steering that ship that has such a massive impact around the world. And at Klaviyo, we are building the next iconic company for the future. And that is just...
I just have one last stop on the train here. I want to stop again before we talk about Klaviyo. And it's your 5-year investment at Walmart. You enter Walmart at a rather senior level. You're a senior vice president, corporate finance and cost transformation. As you described to us, you climb another few rungs and you're the executive vice president of CFO and CFO of Walmart International when you leave. So within 5 years, again, a nice progression of senior roles, top role. Then you had this conversation with the founder, as you described. And I have to believe, though, this is a SaaS business. You're in Walmart. Can you tell us how your time at Walmart might have prepared you for something, I guess by comparing them, it's far more entrepreneurial. It's a SaaS business. It's a different business model. Correct me. What's the commonality here?
Yeah. So what prepared me, there's more in common across a Walmart and a Klaviyo than you might think. Both businesses are in the midst of undergoing massive transformation. Both businesses share a common DNA in the belief that the world around us is changing so rapidly that if you are not changing faster than everything out there, you are falling behind. And they share this incessant drive that there is no rest. We can always, not only can, but must continually get better as well. At Walmart International, I was the CFO. We had 9 major businesses around the world. 2 of those businesses were based in India, venture-backed businesses, Flipkart and PhonePe, respectively the largest e-commerce and electronic payments business in India. And the exposure to working with those teams and seeing how dynamic and fast-moving a high-growth venture-backed company can be really got me excited about the potential of joining a similar company myself. But I think the benefit of having worked at Walmart when I came to Klaviyo is what good looks like. You know what we need to aim for. So again, as I said at the beginning, the business has more than doubled in scale since I joined, which meant that when I joined, I had to be setting up the systems and the processes and the ways of working that were going to scale as the business grew. So I always call it let's be kind to our future selves. 2 years from now, this business is going to be twice as big as it is today. What do we need to put in place now that's going to get ready for that future so that we don't look back and say, oh, why didn't I plan for this in advance? And so that's what it really gave me, is that vision of what does good look like, but also the experience of working at speed and at pace, and how do you change things quickly. And then, it does look, interesting going from retail to SaaS. I think the main thing that you learn is the humility to come into a business and say, look, I understand generally how businesses work, but I am going to go very deep, very quickly to learn the specifics of what make this business tick. And in some ways, I think it actually helped me ramp up quicker because I didn't come in with preconceived notions. I asked a lot of questions and learned. And the dynamics of SaaS or business, and actually even within SaaS, Klaviyo is a little bit unique. Our model is not seat-based. We price based on number of profiles and messages sent. We have some parts of the business that are really data and infrastructure, and some parts that are more almost akin to a usage-based model. So it's this very interesting blend. And the fact that I didn't come in with preconceived notions actually really helped to learn the business quickly and what makes us uniquely successful.
Really nice detail there. Thank you for answering my SaaS question. I do appreciate it. Hey, now let's find out about Klaviyo. What's the mission here? Tell us about this company.
Yeah. So Klaviyo is the only CRM that was custom built for consumer brands. So our platform brings together all-in-one marketing and service and analytics by bringing together all of the data that a business, a B2C business, knows about its consumers and using that data to power personalized insights and personalized communication at massive internet consumer scale. These days, the bar for consumers has gotten so much higher. Nobody wants to be just generically a valued consumer. They want to be Sarah, who loves yoga pants in blue. And so Klaviyo is about connecting every single dot in that consumer journey from the very first time that they enter a store or click on a website all the way through to their 100th purchase. We've got over 169,000 customers, including consumer brands like Mattel and Glossier and Core Power Yoga and Daily Harvest. What really differentiates us is that there are some wonderful companies out there who are B2B CRMs. We have an immense amount of respect for them, think that they've built great businesses, but B2B CRMs weren't built for B2C needs. The B2B CRMs are designed for what are much longer and more complex sales cycles. They have smaller teams. The data that comes in is generally manually entered into a system, and it's slower decision-making, whereas a consumer business has thousands, if not millions of consumers. And for each consumer, they have thousands of touch points with them, from what did they buy to what did they look at on the website or shop in the store. They can't keep up with the speed and scale. The B2B CRMs can't keep up with that speed and scale that's required to manage all of those touch points and then in real time use it to transform how do you talk to your consumers. And so because we actually started as a database company, when we vertically integrated our data into the application layer, we can stitch every single moment of that customer lifecycle together and use it to power retention and loyalty. And then in our view, the most important thing, which is revenue and ROI for our customers. Because at the end of the day, it's about how much money do we help our customers make.
Well, your timing is interesting here. You entered the CFO office, of course, in 2022. And a year later, the company is public, roughly. Is this a milestone you've achieved in the past, by the way, or was this your first IPO milestone, should we ask?
This was my first IPO. I had gone through big M&A transactions before, had worked with businesses who were starting to get ready for the IPO, but had not been for an IPO.
Very exciting for you. Can you go back in time and just relate to us? I mean, you step in, perhaps it was already something that the company was looking forward to, or maybe not. Maybe you had a lot to do to get an IPO ready.
The company had already been contemplating going public. So that was one of the things that we talked about from the start when I was joining, is that this was the intention and that part of my role would be getting the company ready to go public and taking it public. And there had been a lot of terrific work done to prepare for that. So the team had already started working on, measuring their forecast accuracy, getting into a guidance cadence with the board, saying, if we were public, here's how we would guide. This is how we would talk about the quarter. Here's how we actually delivered against what we said, to really start to act as if we were public. And then when I came in, it was, how do we take that to the next level? So there were 4 big priorities that I had for the team. It was 1, get public company ready. 2, build for scale. That's being kind to ourselves in the future that I talked about getting systems and processes in place. 3, be an excellent business partner and help push the business forward. And then 4, build a great team. And so we spent that next year really working on public company readiness with the lens that this wasn't just about getting ready for an IPO. It was more importantly about getting ready to be a public company and to operate successfully and to continue to grow as a public company for a long, long time into the future. And so we thought about readiness in a few different ways. We thought about what I would call technical readiness. Can we forecast? Can we close the books quickly enough? Have we done an assessment of our controls and make sure that we have a great control environment and our accounting is up to public company standards? We also thought about strategic readiness. Is the business ready? Is this a great time to go public? And in that, I mean, not the market timing, I think the most important thing when you're going public is thinking about what is the right time where you've grown enough to have a really strong track record to show that you can execute and that you can grow at scale. You've got some growth levers that are going to help carry you into the future where you've made enough progress that people can see, okay, they can really drive these new areas of growth. And then you also have enough new growth levers on the table that there's upside to share with your investors. They don't want to invest in a new IPO where all of the growth is behind us. They want to participate in the company as it's going forward and share in those results. And so we were at a great point of having demonstrated we had grown in our core business, which is serving primarily retail businesses and small and medium businesses. And we had shown progress in moving up market and international, and we're starting to lay the seeds for future growth.
Can you maybe share with us how, as a public company, how you engage, what you've learned in regards to engaging with investors and analysts? You've gone through this process of taking a company public. I imagine there were many learnings along the way. But whether we communicate too much, too little, what occurred to you?
Yeah, a few different things. One is it's important to start early, and I should have mentioned that as the third leg of our IPO readiness is this communication readiness. You don't want the first time that you meet an investor to be when you're on your IPO roadshow. If at all possible, you want that to be at minimum the second, if not the third or the fourth time. They want to understand your company and they, care about your numbers, but it's also a relationship business. It's, do I know you? Can I trust you? How do I feel about your ability to lead this company and to deliver on the commitments you're making? And that trust takes time to build. And so we, started going out on the road and meeting with investors well before we were public so that by the time we got there, we had built those relationships over time. I actually just came back this morning or last night from 2 days of investor conferences, one in New York and one in Chicago. And it's just wonderful to go into these and see so many familiar faces, people who we've gotten to know over the last, 2-3+ years, who are really invested in, not just literally invested in Klaviyo, but invested in understanding the team and the story and where we're headed. The other thing about investors, it's very important to say what you do and do what you say, to be confident in the projections that you're giving because you really deeply understand the business, and to know that when you make a commitment, that is a very firm commitment externally, and you need to have confidence and the track record of showing that you can hit it. They don't want the story to change over time or the numbers to change over time. Predictability and consistency is a really important thing. And then I think the third thing that I've learned about working in investors is they're incredibly smart. They're really, not that that was a surprise, but it's just been a joy. These are folks who think very deeply about businesses all the time, have a very wide breadth of companies that they cover and they think about, and thinking about what really drives value in a business. And so it's great to meet with them, not only to tell our story and where we're headed, but to hear from them, their thoughts on, here are the things that I'm seeing from other companies. Here are the things that you guys can do better. This is what we'd love to see. Because their business insights and their input are incredibly valued to us as a leadership team.
Some wonderful insight there for us. Thank you. We want to ask you about some of your top of mind metrics. Before we do, though, curious about your approach to the FP&A team, whether you have a team that you embed, whether you've organized it a little differently, whether your unique experiences and strategy influenced how you might, how you prioritize when it comes to FP&A. Anything you can reflect on there for us?
Yeah, our strong vision for our FP&A team, which comes not only from me, but also importantly from Andrew, our CFO, is that our FP&A team is going to be, not only business partners, but really strong business leaders. So FP&A is, yes, it requires the base level is you need to be doing forecasting and budgeting and reporting the numbers. And our team does that with excellence. Sorry about that. So our FP&A team, is not only forecasting and budgeting and reporting the numbers and doing that with excellence, they are also importantly, working hand in hand with business leaders, helping them see around corners, understand what's happening in their business. I remember at one point, Andrew, our CEO, came to me and said, okay, in this section of the business, we're seeing gross margins that aren't where we'd like. I'd like FP&A to take the lead on how do we change the business to make that better. So it's not just reporting what is the gross margin, it's actually thinking about and leading the work to change the way that we operate. So the way that we organize is therefore very highly aligned to the way the business is organized. We have incredibly strong leaders of R&D finance and of go-to-market finance. And then we've got a great central team who is the business partner to the corporate functions and also helps us with consolidation and thinking about basically being business partners to Andrew and the executive team on how do we take the company.
Is the FP&A team also involved in the customer experience, measuring all of what's involved with customer success, or is that sort of a separate group?
So largely it's a separate group who sits within our go-to-market team. But I would say that one of our core values across Klaviyo, literally one of our core values, is to be customer first. And so everyone across Klaviyo is expected to talk to and work with and understand customers and be exposed to them on a regular basis, because that's the way you really understand what do we need our business to deliver, who are we benefiting in the end, and how do we make our business better to make our customers more successful. So for instance, in our leadership team, we have customers join the leadership team each week to talk with us about what they think is working well, things that we can do better. Our FP&A team had a customer join yesterday as part of one of their all hands meetings. And so that customer proximity is just a really core part of how we try to operate.
Customer-based, non-financial metric that you have to admit you spend a lot of time thinking about or studying, or what would you tell us in terms of those numbers that allow you to see into that customer space?
Yeah. I mean, we look at, so for instance, with all the volatility that's going on in the external market right now, we tend to be a very data-driven company in general. But we have amped that up even more in this environment. And so we're looking at many of our major metrics that would give us leading indicators of what's happening out there in the market today on not just a weekly or monthly basis, but actually daily trackers so that we can see if things are changing as the news cycle changes, then the environment changes. And for those, we look at not only the metrics of our business, so, what's happening with sales cycle lengths, what's happening with new lands, but we look at things from our customers' perspective. How's their GMV growing? How's their, what we call KAV, Klaviyo Attributed Value, the revenue that they generate directly from Klaviyo? How's that growing? What's happening to average order value, to average order size, so we can really try and put ourselves in their shoes. And then as a business, we have been doing a lot of work to try and help our customers navigate through all this volatility by doing weekly surveys of consumers around the country, asking them how they're feeling, what their plans are, and then publishing recommendations for our customers based on what we're hearing from consumers about how they can most effectively navigate and manage their business through this time. From a financial standpoint, you didn't ask, but I'll answer. We are big believers in unit economics. And you talked a little bit about some of the differences between SaaS and other industries. And in SaaS, you do look at unit economics differently than you do in other industries. But we spend a lot of time thinking about and working on unit economics of the business. It's one of the joys of joining as CFO. Working for a founder who bootstrapped the business. AB and Ed bootstrapped for many years. They were actually profitable before they took on outside capital. So they've always believed that it takes creativity, but it very much is possible to grow a business and not have it be an either or between growth or efficiency. And the way that you do that is by really staying tight on what does it cost us to acquire a customer? Where is the spending going? What returns are we seeing from that? If we're not happy with them, what tweaks can we make? How do we experiment? But we're continuously looking, by customer group, by geography, a whole bunch of different ways to look at the business at what are the returns. Because as the finance team, our goal is to invest capital that's going to help the business grow quickly and efficiently.
We want to quickly touch on AI with you. And just to begin with, can you share with us how this organization has integrated AI into its strategy?
Yeah. So for Klaviyo overall, AI is a core part of our strategy. We believe that the future is a world where we can not only help our customers bring their ideas about how they want to personalize their communications with their customers to life, we can actually help do it for them. And, as our customers have told us, they say, you as Klaviyo have seen hundreds of thousands of customers over a decade of operation, know what works well, what doesn't. Tell me what to do and actually make it happen for me. And that's our vision, is that at some point we are going to have, our CEO refers to it as, if you think of Klaviyo like a video game, that Klaviyo should be better at playing the game of Klaviyo than any person out there. And how do we use that knowledge and that success to help our customers be really successful? So our vision is that over time, we will be at the point where you can, not only see a recommendation in Klaviyo, which we have in our business today. Here are the 3 next best things that you can do to help improve your marketing strategy and the way that you communicate to your customers. We also will say, and, we've already developed item number 1 for you. Here's our draft. Here's how we'd put it into practice. Do you want to implement this? Check the yes box, and off we go. We're off and running. So that work and that vision is actively under development today. Right now, what we have is, as I said, recommended next best action, which uses intelligence to develop a personalized recommendation for every customer about the best thing they can do to improve their business. And we also have generative AI tools that solve for our customer the problem of the blank page. So everyone looks at, you've seen it, you try and draft an email, draft a presentation. It's hard to start. It's easier to edit something else that's already been created. So we can draft up for our customers the first pass of an email, the first pass of a SMS message. We can create imagery, and we can do all of those if we have enough data on your brand in your brand's voice. So we're really excited about where AI is headed in the business. And then within the company, we are very actively working on how we use AI within the business as well. So as you might imagine, our engineering team is using all of the AI coding tools. Our go-to-market team is thinking about how do we leverage AI in sales and support to help our teams be even more effective in the way that they operate. We're looking at it within finance. There's some amazing things happening out there, thinking about how do you basically reduce the drudgery, the things we were talking about it within our team that you don't love to do as a finance professional, the repetitive, I need to move data from this sheet into this PowerPoint presentation, at the end of the month. I need to work on, the accruals and gathering information out of emails. All of that in the future can be automated with AI, which will make jobs so much more fun. So much more interactive.
Yeah, there's so much going on there. And again, you're wowing your customers with these new AI tools and functionality. Internally, your people are thinking of ways they can work more effectively and efficiently. How do you evaluate the return on some of these AI investments you must be making?
Yeah. We look at how is it helping our teams be more efficient and effective, right? So it's, we have the, what I would call a luxury problem of we are a fast growing company, right? And so back to talking about the coming in a couple of years ago and thinking about how do I scale this business, knowing that not too long from now, it's going to be twice as big as it is now. AI is a great way that we can scale the business. And we think about what returns will it create for us in enabling us to scale really efficiently and effectively, and also, again, increase satisfaction and increase engagement by making work more interesting.
Where do you think AI is having the greatest impact when it comes to automating finance operations?
It's a great question. We have a SaaS CFO networking group and have been talking about this recently, about who and where are folks adopting AI. I think it's still in early days in finance, across at least my peer set relative to some other functions. But I think some of the early places where we've seen interesting use cases where people are making good progress are in internal audit, in some of the accounting areas, and then a little bit in FP&A. And then I think the other team within my team, I also have responsibility for business intelligence, and the business intelligence team and that whole community has been very active in thinking about how do I use AI to really improve the quality and the enrichment of all the data that we use to analyze the business.
We have heard time and again how challenging it can be to try to measure these types of initiatives. And beyond the trying to measure them, we're wondering what challenges, if any, have you faced with AI implementation, and whether you can offer any advice to your peers out there who are similarly trying to understand better, trying to watch, trying to at the same time move forward and achieve some traction.
Yeah, I think one of the greatest challenges that I've seen and heard is one that came up in a session that I was with Deloitte a few weeks ago, and it resonates all the way back actually to my business school days. I took a fantastic change management class from Ed Schein, who is a kind of legendary in the space. And one of the things that he was very focused on is if you think about change, like someone is up against a wall, hitting a wall, and you're trying to get them to break through that wall. The key to change is not to give everybody all of the rationale for why you need to push through the wall. It's to figure out what is creating that wall and how do you break it down. And so I think in the case of AI, frequently people are thinking, I need to tell everybody all the reasons why AI is important. My belief is at this point, everyone should know why AI is important, that it's changing the future. That should not be a surprise. If it is, that's a different conversation. But it's what are the things that make it hard for people? It's do they understand enough about how the model works to be comfortable and confident in the outcome? Are they worried about what impact is it going to have for me? And therefore you need to think about and talk about what is the impact in the future. But it's really thinking about the human side of what are the barriers that are going to make it hard for people to adopt, and how do you systematically work and break down each of those barriers?
Great advice for us there. Thank you for that. We are up to what we like to refer to as our finance strategic moment question. Again, this is where we asked finance leaders to look back in time and just share just one moment of insight that they experienced along the way during their careers. Might have happened long ago, might have happened last week. Anything come to mind for us?
Yeah, for me, it was one that I spoke to a little bit about when I was speaking about my career journey, which was my very first CFO role 10 or 12 years ago, where I had just switched out of strategy and had taken over a finance team that the president of the business unit really wanted to take to the next level. And so over the course of the year, what we looked at was there were three really important things that we had to do. We had to improve our cost accounting because we were a dairy operation. Cost of goods sold and the use of milk was really important, but our plants didn't have great visibility into that. And that meant that they couldn't make the right choices and decisions when they were running the plant that would drive the right level of usage and management of cost of goods sold. On the sales side, we were incenting everyone on effectively revenue. But we had a very different product suite where one product had probably 10 times the gross profit per revenue dollar that another product had, but everyone was incented to sell the lower gross profit product because it generated the most dollars. And so we had to flip the incentive structure, but that meant that we needed to educate people on the why and the how and help them understand. And then the last one was this company who had acquired us had a very different way of managing the P&L, and we needed to change all of our P&L reporting. And the team looked at me when I laid out, here are the things that we need to do this year. And they said, you're crazy. There's no way we can do that all over the course of the year. But we did. And it was so much fun. We improved the cost accounting. We had folks out in the plants, working side by side with operators, really understanding the way that things worked, changed the system there. We partnered really closely with the head of sales. We not only got in place the reporting that helped people see where we were making money, but we did a lot of training and enablement on the how and the why and helping folks understand it. And we implemented the changes in reporting. And a year later, the business was 10% more profitable because people could now understand where we were spending money. They could be selling the right product. Everyone is aligned and rowing in the same direction. And for me, it was the power of finance to really use our toolkits and our analysis and partner very deeply with business operators to make a really big strategic impact on the business. And that was what convinced me, previously, as you pointed out earlier, I had been in strategy and wanted to be a general manager. And I said, oh no, as finance get to be, you get to work with every function. You get to really change things that shape where the business is going forward. It's highly quantitative and analytical, and it involves working with a lot of really great people across multiple different functions with different perspectives. This is fun. And this is what I want to do going forward. And that's how I entered into finance as my go-forward career.
Wonderful chapter to share with us, a chapter of discovery. And as we move into what we refer to as the mentoring round, I have to say we usually begin this chapter by saying, when you got into the finance CFO role, what were you unprepared for? What did you not expect? And it sounds like you were wired for the role is what you discovered, but what is it that maybe you weren't aware of or this is part of the job, is it?
Well, given my background, you can see I'm not a CPA. I came up through strategy, which is highly quantitative. I'd gone to business school at MIT and took classes in accounting, but I'm not an accountant by nature. And I was in that very first CFO role, and I'd been in role 2 weeks. And the head of internal audit came and kind of leaned on my door frame and said, "Oh, Amanda, I wanted to let you know that I told the board today you have several material weaknesses." And I said, "I have what?" And I had suspicions at the time that accounting was someplace I was going to need to deep dive and that it would take a lot of focus for me because it's not my natural home. And as a leader, I think it's always important I resist the temptation to spend time in the place you're comfortable. And I knew I was going to have to spend time in accounting, which was the place that I was uncomfortable, but I got a very fast crash course in controls and the importance of good controls and how do you identify where your issues are and how do you quickly remediate them. And it gave me a deep appreciation for partnership with internal audit. It gave me a deep appreciation for everything that's involved in making a process like that work, but it was definitely a newer area for me. And sure enough, within that first year, while we were doing everything that we just talked about in cost accounting and in sales incentives, we also did a lot of controls remediation as well.
Well, great moment to recall for us as well, right there. We always like to ask our guests to reflect a little on the personal side. Amanda, you've been with Klaviyo since 2022, is it? And we're curious, your colleagues, there's still something they might not know about you, something most people might not know about you. Anything you can share with us?
Yeah. One thing that people might be surprised to know about me and have been when they've seen it. So as a CFO, you need to be very structured. You need to be very plan oriented. But on the Myers-Briggs test, where you have that last line of between P and J, which is essentially kind of more free thinking, idea flowing versus more structured and linear. I started off earlier in my career as a very strong P. That growing up was my natural home. And over time, I've shifted towards the middle because that's the demands of the job, right? As a CFO, you have to show up like a J. So for me, that's been a great reminder that adaptability is key. You really have to flex into what the job needs. But I think most people who work with me, if you asked them, they would say, "Oh, Amanda, it's definitely a J." But
we're nearly at our final question. Before we ask it, we always like to. Do you have a book for us or a resource that you like to recommend? Anything?
Yeah, there's a few. So I'm a huge fan of Patrick Lencioni and the Table Group. So I would put, his book, The Advantage, which is his capstone of the series, at the top of that list that talks about how do you build a healthy, high-performing organization. And then very close behind would be Five Dysfunctions of a Team, about how do you build and lead a great team. I think I reread that. It's a short read, only takes a few hours, and I probably reread it every few years. Whenever you start a new role, whether inside the same company or outside, I'm a big recommender of The First 90 Days. There's a HBR book. I reread that every time that I start something new, and it just helps you reground on how to get up to speed quickly. And then I also like The Outsiders, which is a fascinating read. It's profiles of leaders who took big, bold strokes, maybe went against the conventional wisdom, and created a ton of value. And so I think it's something that every great leader needs to.
Wow, great variety, great mix for us. Thank you for those. So we get to ask you now, looking forward the next 12 months, we'd like you to share with us your CFO priorities. What would those be for the coming 12?
Yeah. Our top priority is to continue Klaviyo's history and trajectory of driving strong growth and driving that growth in a highly efficient manner. So that means helping the business make really smart investments, allocating our capital, allocating our resources to the places where they're going to have the greatest impact. So, I always like to, wherever we can, try and come to the business with the yes, here's how we can make this investment, but here are the things we're going to need to do in order to make it happen. And just making sure that we continue to grow, continue to invest, but continue to stay disciplined as we do so. And then I'm also focused on, as we talked about earlier, how do we evolve finance for the future? How do we get ready today for where we need to be a few years from now, using AI, using other tools that are really going to help us move faster, get to insights more quickly, and deliver even more value to the business.
Amanda Whalen, thank you for joining us on CFO Thought Leader.
Fantastic. Thank you so much. I appreciate it, Darren.